I'm Steve Handy. I'm the CFO of Giftify. Give you a little background. We're a newly uplisted NASDAQ company. The company was called RDE Inc. It was an OTC company. Had one digital platform underneath, restaurant.com. That was a distressed asset that it acquired. And then right at the end of the last business day of last year, it acquired a much larger company called cardcash.com. So what you end up having as you go into 2024, you have two digital platforms, cardcash, restaurant.com. Both were distressed at the time. And so now 2024 was about reorganizing internally, cutting costs, getting the growth initiatives underway, and 2025 is going to be our growth year. We just generated 14.9% growth in the last quarter, and so you're starting to see some of that pick up now. So we came out on NASDAQ a few months ago. We changed the name RDE to Giftify to kind of brand more what it is we do. And we're the pioneer in the incentive and rewards industry with a focus on retail dining and entertainment. Ticker symbol's GIFT, G-I-F-T. We're about $39 million market cap. When we came on NASDAQ, it was at $100 million market cap. There's no reason why it fell that we could put our finger on, besides we're just new to the space and to NASDAQ. And so, it's trading around $1.50 now. Management's been buying in between $1.52. So we think it's undervalued. 9-month numbers were $65 million in revenue. And you have cash about $3.1 million at the end of last quarter. And so the investment highlights here, we have a large and growing addressable markets that are economic and recession-proof. We say economic and recession-proof just because we give good discounts to our consumers. And in cases of an economic downturn, people are seeking discounts. We have patented technology that really helps in the use of our apps on the phone. You can download cardcash.com or restaurants.com. You can see how functional these apps are. They're really easy to use, and they're quick and fast. And we have multiple levers to accelerate growth. We have not generated revenue from advertising. We have millions of users. We have not cross-sold the two platforms yet. We plan to do that in the very near future. And we're reducing costs now, the synergies of acquisition. And so we will be the premier online platform for discounted gift cards and promotional offers. The value is in the ease of use. If you want to save money on retail and restaurant offerings, it's fairly seamless and fast, and you get to save immediately. Revenues last year were $89.3 million for the full year. So we acquired, Giftify acquired Cardcash end of last year. This year we're at $64.8 million. We have guided to $85 million. Fourth quarter is the largest quarter. It's gift cards for the most part. And so you can imagine with the holiday seasons coming up, there's a lot of gift cards being purchased. We've enhanced the customer experience through our new sites and the technology. And the whole value here is that we're increasing traffic both retail and restaurants. So we achieve success in proprietary tech. Fraud prevention. If anybody thinks that gift cards is subject to fraud, they're absolutely right. But we have good tools in place that we've developed. They're proprietary. They're used by other parties. That's how good they are, hotels.com, et cetera. So they weed out fraudulent individuals. Our fraud rate is extremely low. So purchasing and spending. On the discounted gift cards, the secondary gift card market, this is all about businesses and consumers buying gift cards and selling gift cards. You have a gift card you don't want, you sell it to us through our app for cash, or you can exchange it for another gift card. Okay? And then there's also the B2C side, when large customers will buy a significant lot of discounted gift cards and give them to their employees as incentives, et cetera. So it's doing that. So 50-50 revenue mix is where we're at today. We talk about blue chip retailer partnerships. This is a future growth initiative that we're working on. Think about Nordstrom's, say, has a white label site for which they are able to accept any other gift card out there in the marketplace and able to exchange it for their own gift card and buy merchandise in the store. So it's a lot of value there. We have bulk sellers, individual sellers, and then bulk buyers and individual buyers. We're about the arbitrage. It's about what we get that inventory at. We turn the inventory quickly, every 15 days. We know how to price it. We've been around for a bit. We are the largest in this marketplace. And so we're able to turn gift cards. We have 500 brands in the marketplace. And so it's, it's a really valuable tool. If you want to save money, which a lot of people do, you just download our app, you look at all 500 plus retailers that are out there in the marketplace, you see the discounts immediately on the app that we're offering. You're able to download it, put it in your digital wallet, and use it that quick. And so it's a really, really nice offering. And, you save. You go to Walmart, you go to Target, you go to wherever, Starbucks. You just do these throughout the day, and it adds up to a lot of money over time. So an example of the revenue model. Up top, you'll see a 12% margin. This is a high volume margin, low margin business, although the margin is a focus, and we are increasing it. So here, simple example. Sarah receives a $100 gift card she doesn't want. She approaches us on the app. She loads up her card on the app. We buy it from her for $81. We immediately do a verified check, 140 plus data points. We collect all that data on the customer. We understand how much is available on the card. And so we go through a verification process before we accept it into our inventory. If we find it's fraudulent or it doesn't meet our criteria, it's kicked out and we don't buy it. Then we turn around and we resell it. Somebody comes in on our site, they want it for $90. It has a $100 face value. That's our margin, and then they go out and spend the $100, and so they get a discount. Fraud Fix is our proprietary software we've been developing for a while. It's used by Hotels.com, CBS, and others. This is one where it's 165 data points, very effective. Our fraud rate is extremely low in an industry that is, that has fraud in it. And I think that instills a lot of trust in our user base, which, by the way, our user base is extremely sticky. They use the app. You're not finding another app on the internet that provides the type of service we provide and the value we provide, and so they just keep coming back. They keep seeing the value time and time again. So we talk about this. They place the order in the API. 100 data points are captured for every customer. Once an order is placed, Fraud Fix returns a decision. This is within seconds. And then there's an automatic rejection or acceptance. And we do have customer service. We will call if there's an issue or a person needs to get involved. So we have sold over $1 billion worth of gift cards since inception. We have 420,000 consumers. Average gift card, $108, and our inventory turns every 12.6 days. So it's a fairly easy business to understand and know. The market is about $400 billion in the US alone, and we're about 50% of the global capacity of gift cards at this point. These are statistics, all sorts of good statistics. You can view it on our website about the ins and outs of gift cards and the percentages of bought per year and when they're bought and the number of breakages and et cetera, et cetera. It's some good information here. And then you talk about the future. To the left is where we're at. We have retail channels. We have bulk buyers and sellers that we cater to. We have consumers, of course. But then you start thinking about, again, the future of what this can do for the retailer. We could do branded exchanges. There's one here with Amazon.com. Instead of paying for cash or credit card, you can actually put in your credit card or your gift card information here and exchange it out. So it kind of turns into a form of currency, which will really open up the market. And then also, talk about point of sale too. Similar thing. Use your card, swap it out, use it as cash. And then we got restaurant.com. Revenue mix-wise, again, I'd emphasize both distressed assets when we bought them. Of the $85 million we'll generate this year, minimum, 82 to $83 million will be on the gift card side of the business. Restaurant.com, the URL alone is amazing. This business used to do a lot more revenue and was very profitable, and that the margins are 90%. And so now we're investing in this line of business. We will continue to market. We have a massive customer database. They've been around for a while, so we're reinstituting the programs, remarketing to these customers, relaunching the restaurants that we had, and we anticipate some significant growth. The URL alone, people eat, and I think the restaurant.com URL is going to drive a lot of traffic and advertising dollars, and I think there's a bright future for this line of business as well. So the website itself, B2B revenue, T-Mobile, they have a massive customer base. This is an example. They'll come to us and they'll say, well, we want a loyalty program for our customers, our phone users. And so on the bill, we'll go ahead and give an offer on the telephone bill to have discounts. And we'll buy those codes off you guys, and they'll buy it off us for pure cash, all margin, and then they'll distribute it to the customers that want it. This model from a consumer side, if you're just going to go on our website, you want $25 off, you're going to pay $25. You're going to pay $25. This is an example. $25, you're going to get a $50 discount for the restaurant. You give us $25. There is no rev share. It's all ours. That drives traffic into the restaurants, and that's all good for everybody. The restaurants will put something on it like, well, okay, we'll give you that much off, but you got to spend at least $100, right, in the restaurant. And so a lot of people do, and it's pure revenue to us. And this just talks about our corporate programs. I talked to you about T-Mobile. I talked to you about the brand name. We have multiple revenue sources as well. I'm personally very excited about this line of business. I think it has a huge potential, and I think the margins are super strong. And I think that combined with card cash, and you start cross-selling gift cards for restaurant deals, I think you can start to see some acceleration on the top line. And the restaurant, serviceable market's kind of funny. It's just huge. There's just so many restaurants out there that are full service, mom and pops, and other locations that are always trying to drive in traffic. So I'll touch on this real quick. Again, our focus has been on margins. This year, 24, 25 is going to be on growth. We burned a little bit more cash, $1.7 million so far, probably end up around $2 million. The key here is the revenues are a little bit down, but margins are up. You're bringing in more gross margin. So the quality of the gift cards that we're bringing in is stronger on our side. And so we'll keep focusing on that. We are going to grow the top line. We are going to have similar margins. We have cash of $3 million at the end of September. So again, stock came out at 4 when it was listed on NASDAQ a few months ago. You see the trend. It just drops out of nowhere to $1.50. I'll leave it up to you whether you think it's undervalued. But I think there's a good growth story here for next year. Questions?
What's average yearly growth of new customers?
I'm sorry, I didn't.
What's like the percentage of each year like growing new customers?
No, it's I don't know. I don't have the exact answer for you, but the turnover rate on restaurants, and I hesitate to say because of the history of the companies and where they're going now, right? At the end of the day, the history is probably pretty low. Card cash is sticky. Those customers stay around and they spend a lot. Restaurant.com, I think, is a little bit lower, but expect that to improve as we go forward.
Okay. Yeah. And do you know like anything about like the cost of capital for each new customer?
We do, but we're not disclosing that yet. So we'll do that soon. Right. So we don't disclose that yet. We do know it, but it'll be something we look at as a disclosure. Because we get that question a lot. Okay. It's a valid question. I just haven't put it out there. So.
Can you talk about the revenue split between card cash and restaurant.com? Is that broken out?
Yeah, it's disclosed in the Qs and Ks. It's about 97% card cash, 3% restaurant.com.
Has there been any issues in maintaining a healthy inventory level for card cash?
Only in that we don't get enough.
Right.
So, we turn it so quickly. That's all about the demand, the awareness. We're hitting universities, we're hitting, influencers on campus. We're trying to get the younger generation on board. This has a great following for those who use it. A lot of people just don't know it. And so, we're going to try to push that, pay a little influencer money, which helps them, and then brings on the younger generation to start promoting it internally. So I think it's primed for growth, and it's achieved what it's achieved without a whole lot of marketing behind it. So far. And it's easy to understand. What's it?
Can you buy used cars?
Yes. Yeah, we could buy used cards. We'll take a look at what's available on those cards, and then we'll turn them.
Concerning the fraud aspect, have you guys been, you say you're fraud, you say you have regular fraud rates, but they also come out with better ways of doing it? There are ways you can bounce around different IP addresses to get around a lot of the ways you would censor it? Have you guys been developing ways to make sure you're ahead of the curve in that regard?
Yeah. It's a never-ending game, right?
Yeah.
So you're always trying to keep up. Our fraud rate is less than 0.5%. I mean, it's very, very low. And so the indicator there was that would change, and then we know something's up. But we've been very, very consistent in that level for quite some time. So we're not seeing an increase in fraud.
When you acquired these two, was it stock or you public at that point?
So we were on the OTC. I've only been here for 3 months, by the way, so I wasn't here when the acquisition occurred. But OTC prior, just private capital raises, and they gave out some stock and cash, a little bit of notes, and that was it. Both these companies were in pretty bad shape financially, and so we were able to get them on a pretty good deal. I mean, Card Cash was a $25 million deal, mostly stock at the time.
Are those sellers patient, or they want to monetize the stock?
Well, they're patient for now, but it's been 10 months, so, can't control them too much. But they see the potential, so, if they care, I don't know, banks, so. Yeah. Anything else? Oh, hi.
What is your turnaround plan for restaurant.com?
So restaurant.com, good question. We've reduced the cost. We're now break even on that line of business. That is about picking up salespeople to go out to the restaurants, right? Commission-based folks to, again, reinvigorate our product. And then from there, we'll do some advertising as well to get the customer base reinvigorated. Hundreds, millions of customers we already have, right, as far as database is concerned. And so we'll get that back out there, re-show the value, and we'll grow.
The plan is not to make it like OpenTable or Resi?
Not yet, no. I mean, I would love to partner with OpenTable to offer, reservations within the site. That would be great, but just not yet. So. All right, we good?
With more than 6,000 small and micro-cap companies listed, if you're looking for the next Apple, then ChannelCheck truly is your trade. It's an investor community where you can access independent Wall Street research, advanced market data, balanced news, corporate videos, and podcasts. You can even register to attend in-person Meet the Management Series lunches, and to be part of the preeminent annual Small and Micro-Cap Investor Conference, NobleCon. And here's the best news. Since ChannelCheck is sponsored by the featured companies, premium membership requires no investment. It's absolutely free. So check it out. Log in today. Find out why ChannelCheck is North America's leading source of research on the companies that just may change the world.